video is also available, yes.
This meeting is being
Radhini, we need the flyer on the screen.
Good afternoon. Welcome to the YCAF Knowledge Forum, Startups and Entrepreneurs, Making Dreams a Reality. We at the Young Chartered Accountants Forum try to bring you interesting and relevant topics and engage with speakers from various backgrounds to share their knowledge with our audience. So you can find the previous knowledge forums on our YouTube. Please subscribe to the Young Chartered Accountants Forum YouTube channel. Today's topic is a new area of discussion for us, startups and entrepreneurs. So we are going to talk about global and local trends, opportunities and challenges, taking risks and making dreams a reality. The pandemic has led many of us to rethink what we want to do in life, where and how we work. This has given rise to the Great Resignation trend and drawn more people towards starting up on their own. So we have a very interesting personality who has involved in the startup arena for years joining us today. And I'm happy to host this interactive session with Nishadi. Before we introduce the speaker, let me remind you about the Q&A tab that you can use to share your questions. And also that we will be sharing the feedback form towards the end of the session to get your comments and also details for awarding of CPD.
Let me introduce our speaker for today's session, Mr. Chalinda Abekon, CEO, Principal, Lankan Angel Network. Chalinda has helped hundreds of startups in Asia fine-tune their business models. He has been instrumental in launching incubators, accelerators, and venture capital funds for over a decade. Chalinda is passionate about accelerating promising startups to scale beyond Sri Lanka. On behalf of the Young Chartered Accountants Forum, I would like to warmly welcome you to the session today, Chalinda.
Thanks, Nishadi and Netra, for that introduction. Great to be here, and thank you for inviting me to Sri Lanka for this event. Super excited. I just realized that there's closer to 100 people, 84 joining, so super excited.
So Chalinda, without much further ado, I would like to start the session. So let's dive into the session by giving an overview of a startup and what is the startup ecosystem. If you can define what is a startup and also the startup ecosystem, I think that will be a good starting point for this discussion today.
Sure. I think, from a language, perspective, any new business is now being, called a startup. And I think, especially if you look at Sri Lanka, it started becoming very much popular from 2010 onwards. From an investor standpoint, when we say a startup, we are looking at a company which can scale very fast, very rapidly, in a span of 5 to 7 to 10 years. And take it beyond Sri Lanka, and the whole purpose is to provide either increase employee opportunities, FDI, and so on and so forth. So this phenomenon kind of started, like I said, from 2010 onwards. If you look at the startup ecosystem in Sri Lanka, we had a study done by Startup Genome, which is like the Gartner for the startup ecosystem, and this study was done last year, 2021. And they valued the ecosystem at about 135 million US dollars. So it's a very small number in the grand scheme of things, if you really look at it, because especially when you have unicorns that are coming up these days, which are over $1 billion, right? So as an ecosystem, we are less than a unicorn but it's been growing rapidly in the this 135. The previous study was done in 2015, if I'm not mistaken, or 16 times. So within about 4 to 5 years, it's basically quadrupled to 130. So we are in that growth stage right now.
Okay, say we have a business idea. Say if one person has a business idea, what are the key considerations to consider when defining your business idea?
Nidra, I think, there's one of the things that I say, entrepreneurship or startup, it's all about solving problems, right? And the good thing about in a country like Sri Lanka is we have a lot of problems, problems that are not just limited to Colombo or the country, but you will find problems, everywhere. So one of the main consideration that I would say is that you want to make sure it's a problem, ideally that you yourself has faced. So you understand, the problem a little bit better. You feel the pain when the problem is not solved, and there is some personal linked to that problem. So when we look at companies, when we speak to entrepreneurs, this is something that we try to understand as well. What is that personal, why of all the thousands or millions of ideas out there, why do you want to do this? So that's conviction is what we are looking for. And the other thing that I would look at is, the main other consideration that I would also, recommend is understand that building a company is a lot complicated and it's a lot hard. It's not the sane approach, right? The most sane approach is to, maybe get an education, degree qualification like CA and join a company, right? That's the norm out there, and it's the normal thing to do. You need to be a little bit, eccentric, a little bit crazy, a bit cuckoo to kind of, forgo that path and really, try to build a company. So it's extremely difficult. It's fun. It's absolutely, life-changing experience, but you want to make sure that you are in a position that you understand that you're taking a risk and that you're comfortable with that risk as well. So those are the two main considerations, I would say.
Okay, so I would like to ask a question, as a continuation to what you been discussed right now. So yeah, so startup, I mean, this all will start from a small idea, right? So we all have ideas, and it's all about validating your idea, and also how to create a business opportunity from the idea that you have. So, I mean, to help the audience also, how would you go about identifying the opportunity, and most importantly, validating the idea that you have? I mean, you will have to support your idea. You will have to support your business idea with, some sort of research,
Sure.
right? So what is your viewpoint on that?
Right. So let me start. I think there's two parts to that. So let me start with the second part, which is on the validation side of it, right? The best form of validation is once you have an idea, or once you are looking at, solving a problem that you are facing, maybe let's say even if you have seen it, the most immediate first thing that you should do is to find others who also see it as a problem. So that means, what we call customer development, right? You want to be able to go out, speak to, maybe you will start with your inner circles from people that say, hey, you know what, I have this problem. Do you guys, have the same problem? What do you think about it? Have that dialogue going on. But after that, you want to go outside your circle. You want to speak to random people to understand, what do they think about. And this primary research is the most important, I would say, rather than secondary, even before you go to secondary research, right? Secondary research is, there's a lot of, makeup around secondary research, right? It's presented in a way that, you want to highlight the key things, but it's very, very important as a founder or as the entrepreneur for you to kind of discover. So validation is purely, first part is going, out and speaking to people and trying to understand how do you, what they feel about it. And you can do that through interviews. And nowadays it's so much easier, right? There's a lot of tools, survey tools that are done. You can easily interview people through Zoom now. Pre-pandemic, if you want to do a video call, most people wouldn't be comfortable doing it, but now it's the norm. Most people are uncomfortable doing face-to-face. So you can easily go out and get that feedback from people. So that's the validation process, right? Once you have that primary information, then you go into secondary. Then you need to do a little bit of data, market sizing, and all of that. But those come at a later stage. The second part of it is from the validation standpoint, what you should do is you should not allow people to say that this is the problem, right? You want to get them to come up and say. So majority of the time what happens is when we see a particular problem, many people see it through different perspectives, and your objective is to understand all those perspectives rather than trying to give your perspective and getting people to validate that. So that's the whole piece around that.
So, Charlie, connected to the same question, I would say, yes, it's important for you to understand what others think about your business idea, and do a little bit of research and see what is the market potential, and what's the market potential within Sri Lanka, and also whether you have a potential to grow beyond Sri Lanka. I think at a later stage, that's all what we want, right? If we start a business, it's not like we would want to, of course, explore the explore or expand our business beyond boundaries. So if we do a research, let's say for example, if you are to do research around your business idea, what are the three main questions that you should answer, or what are the three main questions that you try to gather answers around before venturing into the business, or before you start your venture? And also I would link another question to the same thing: how important it is to conduct a market research and also a competitive research before starting your business.
Okay. So the one of the things that you want to do is, let's say if you're starting a business, you want to make sure that there is a large enough market for you to serve, right? So you mentioned about the idea. So what I would like to frame it is, I would like to frame it by saying a problem, right? So so for an example, you want to start a cupcake business. That's a great idea, and if you have a cupcake business, you'll probably be able to serve the immediate community around you, right? But now you have platforms like Uber and PickMe and various other delivery platforms. Now through those platforms, you can reach people that are beyond your immediate vicinity as well, right? So that's a technology that has enabled you to expand your business. So the first thing that I would look at is, okay, I have a problem. I spoke to a few people, they also agree, they also feel the same thing, that there is a problem. And I want to, through that, what I'm trying to understand is, how big is the market? Is this 50 people, 100 people, 1,000 people, 1 million, 1 billion? That's what I want to try and engage. The first part to your question is, we all want to expand, but initially absolutely no one has that clear thinking. Oh, what, in 5 years this is. I know we do 5-year plans, but all of these things are just projections, right? So you want to be able to be, you want to be able to explore. You're going on an adventure, right? It's like you camping or going through the woods. You want to have that freedom as an entrepreneur to explore different avenues without really getting tied down to a certain set path. And so that's the important thing. I'll give you a good example. There's a company that I helped maybe about 4 or 5 years ago, and this person is in Gampaha, and he realized that a lot of the ways that drugs get introduced into the system is through private tuition classes, and Gampaha is one of the hubs. You have a tuition classes which has about 3,000 people. So what he did was to understand this whole ecosystem, and this person at the time would have been in his either late 30s or early 40s. So he would shave and enroll in a private tuition class, and he attended tuition class during the weekends to understand the ecosystem for 3 months. Now that was his validation process. What's going on here? How is this happening? What's the psyche of the people? All of that. So when we kind of supported the company, when we raised capital, and when we invested in his company, we actually invested in him purely because he did that, not because of his technology or anything else. And what started off as a simple attendance system, now in the last 5 years has kind of evolved into a very complex ERP for schools. Now is beyond private tuition and so on. But at that time, we were not even thinking about it, right? We were just trying to solve one problem. So that's the part of it. Sorry, your second question was, I forget the second question.
Whether how important it is to do a market research, right, as well as competitive research. Get to know your competitors also.
Yes, I think it's very, very important. You want to understand who else there is in the market, whether it's already saturated. And this is, particularly important in a country like Sri Lanka, where the market or the country is anyway very small, right? So Sri Lanka is pretty much, you only have 2 to 3 players in most sectors, right? I know if you look at banks or so on, we might have a lot of banks, but if you really look at it, it's still, 22 million people. Same thing with insurance, right? So let's say you want to start a ride-hailing company, it's going to be extremely tough. It's a good idea. It's probably, there is still more potential in different parts of the country, but then there's very, prominent 2 players in the market, and you won't be able to compete with them unless you have significant amount of capital. So it might not be a great opportunity. So that's the reason why you want to do your market research, and it is important to you to understand who the competitors are as well.
I'll just do a follow-up on the same line that we were talking about. So in a market research, what are the things that we need to find out? What are the things that we need to be absolutely sure about? And what questions should we be able to answer before starting the business through research, through the market research or a competitor research, or like in general about research?
Right. Okay. So from a market research, I would say the primary objective is to really understand the different customer personas, right? If I take the previous example, when I said, which is in the education sector, you have multiple customers, right? Your actual customer is the parent. The customer is typically the person who's actually paying, right? And that's why the customer is different from a user, because a user might not always pay, right? But your user is the student. So from a product design standpoint, you need to design a product which is, palatable for the user who is probably in their teens, and a parent who's probably in their, mid 30s to, late 30s, early 40s, and so on. So these are very different profiles, right? So from the market research, the primary objective is for you to understand what is your customer segment, what are their demographics, what are their psychographies, age, what do they do, what's their income level, and how do they spend. All of these information really helps you understand the market potential of it. Because it gives you an indication of your disposable income, whether they will pay for this service. If they're going to pay for this service, how much are they going to pay for it? All of these things. I would say that is the primary, and then the rest of the market research is all about the size. How do you so for an example, the way you sell a certain product. So for an example, we'll take a FMCG product, right? Let's stay away from tech for a moment. We'll take one of these very branded shampoo, right? Majority of us would go and buy it from a supermarket. But if you go to a rural part of Sri Lanka, they would buy the same product, but in a sachet, right? So if you really look at it from a customer standpoint, there's no point in you putting that sachet in a supermarket in Sri Lanka, because nobody's going to buy that. But at the same time, there's no point in putting that tub there as well. But if you really look at it from a company standpoint, your product is being used by everyone, right? So that allows you to kind of, so the market research will allow you to design the product and the placement for it according to the research. How will you do that research essentially?
Chalinda, I think most of us would have heard these terms, accelerator programs and incubator programs, which are of course designed to help startups and of course scale-ups. I would like to get your view, or rather, what is an accelerator program and what is an incubator program? Is there a difference, and how should I choose the best program to my venture, depending on where I am placed in the business cycle, whether it's a startup or a scale-up?
Right. Okay. So basically, the purpose of an incubator is to help entrepreneurs or budding entrepreneurs refine their ideas, validate their ideas. Right. So the people who are enrolling in an incubator essentially comes with just an idea most of the time. Maybe they scribbled it down in a book or a napkin or whatever, that's all that they have. And the whole purpose of the incubator is to try and get that idea, kind of put some shape around it, help validate it, and bring in the resources that is required for the founder or for that budding entrepreneur to validate that particular piece. The purpose of an accelerator is slightly different. When you go into an accelerator, you are typically already a business. You would have started maybe 1 year, 2 years, you have a product, you have a few customers, you're generating some revenue, you understand some, we call it, product market fit. We understand, okay, there's something happening here. Now, how do we scale it? How do we accelerate the growth? That's why it's called an accelerator. So the tools, the resource people that gets involved in that stage is slightly different, but the purpose of it is literally to accelerate, and mainly we are looking at accelerating revenue. And an incubator, you are incubating the idea. And this is essentially the two difference between an incubator and an accelerator.
As a follow-up, Charlie, are there any accelerator programs or incubator programs in Sri Lanka, and any platforms who is supporting any such programs? So anyone who would want to, get more knowledge and to join one of these programs, what are the facilities or what are the opportunities we have here in Sri Lanka?
Sure. Yeah. So for incubator standpoint, there's something called Spiralation, which is done by the ICT agency of Sri Lanka. That's a yearly program. They evaluate ideas. I was part of the team that designed it, 12 years ago, and it's still it's the longest running program right now. And there you get a little bit of money. I think you get about 1.5 million rupees as a grant, which means that you don't have to pay it back even if your idea fails, but you also get a larger support ecosystem, coming in helping you. And similarly, I've just been part of another incubator called Ethical X, which is by the Slyken Trust. That is to do with sustainable solutions, in the tourism space, in the fashion industry, food industry, and so on and so forth. So they also have an incubator. Similarly, Hatch does quite a few programs for female entrepreneurs. They have programs, and they also have other accelerator programs for fintechs. We just ran something maybe about 1.5 years ago as well. So there's quite a few that has come up, and it's also now expanding. I see incubators and accelerators coming in, which is outside tech as well. Things like Ethical X is not purely tech oriented, but there is a sustainability angle to it. There is food, which I think is great, because there is a food crisis around the globe that is we impediment on that, and so on and so forth.
Yeah, that's quite interesting. And I think now Lankan entrepreneurs also, like, we have quite a lot of startups coming up in recent years, especially.
Yeah, I also see, I think there's another one, very, very famous one in Jaffna, actually, YAL IT. So that's an organization, non-for-profit. They run multiple incubators, accelerators for, from junior to senior, various things. The other thing that I'm also seeing is you're seeing kind of a lot of these incubators coming up in different parts of the country, which is very encouraging, right? Which means that entrepreneurship is now not something that is limited to Sri Lanka or rather Colombo. It's expanded across. I know, so the fund that we run, we've had applications from about, I think, almost all 25 districts in Sri Lanka, if not at least 23. That number I'm pretty sure, and that's about 450 applications in a span of 20 months. So we see all these entrepreneurs coming from all parts of the country.
That's really great news, especially to hear that we have all over Sri Lanka people involved in starting up, and also to hear that outside of IT there are startups, especially in food and sectors. So that's awesome. So we want to give a realistic picture for people who have this idea of starting up, or people who are interested in starting on their own. So what are the essentials required to build a successful startup?
I wish there was a
question,
silver
and there's
bullet.
no one direct answer.
Yeah.
Your experience?
I don't know. I think, based on, if you had asked me this question maybe even 2 years ago, prior to the pandemic, my answer would have been different. And 5 years ago, it would have been, it would have been different. And I know 2 years from now, it will definitely be different as well, right? So right now, the most critical thing for me, I would say, the team. It's extremely, when you are building a business, it's almost like, marriage, right? You want to make sure you pick the right people, right? And especially with the pandemic, that's something that we've seen, because there's a lot of challenges that you face, and you don't want to be facing those challenges alone, right? So being an entrepreneur, especially when you're building a tech company which is designed to grow fast, you're raising capital, and investors are there, it becomes a very, very lonely journey, right? Because entrepreneurship, even though it's becoming very popular, it's becoming the norm in Sri Lanka, it's very much a new concept, right? So a lot of the challenges that you have, most of the entrepreneurs, they can't even get help from their parents, because their parents haven't really built companies, so they might not be able to help them. And even your friends might not be able to help you sometimes, because if you're not in that space. So the most important thing for me, I would say, is having a team that comes from different backgrounds, who understands and who will take responsibility for those things. To me right now, that's the number one thing. The rest of it is purely a mindset. When you start the business, you need to understand that you're going to fail, and you're going to fail on a daily basis. There's going to be something that's going to be broken. From the time you wake up, you're trying to fix things up, and you want to get comfortable being in that chaos, right? And you need to get comfortable doing multiple things, or having to do multiple things, right? If somebody is struggling, you need to be able to quickly jump, help them out, do all of that, and they will also do the same thing as well. So that's why for me right now, the answer would be the team. And because the other part is, you also want to have quite a bit of diversity in terms of thinking as well, right? You don't want people in your team who will only agree with you. So even if you're doing the wrong thing, they'll say, yes, let's do that. You want people who will come and challenge your decisions and say, no, we shouldn't do this, you shouldn't be doing that. And you want to have that, you need to be okay with it end of the day.
Okay, so that is one of the things that would make startup successful. But looking at the other side, what can make it go wrong, or what can make a startup fail?
Everything. Everything that you can possibly think can and will go wrong, right? Murphy's law is pretty much rules in the game of startup on a daily basis. And sometimes so that we talk about 5 factors, right? We talk about team, the business model, funding, we talk about timing being right, and so on. So if you really look at it, 2019, when we were doing investments, tourism tech startups was pretty much number one. We were investing in a lot of these companies, because Sri Lanka was ranked almost in every single major publication as the place to be. And then we had Easter Sunday, and then as we were still recovering from that, we had the pandemic, right? So after that, completely dead silence for 2 years. So anybody who was doing tourism related company, not just a startup but any business, suffered. It didn't matter whether you're a large conglomerate running a massive hotel chain, or a small Airbnb individual. Everybody was all of a sudden overnight at the same level. How much of capital you had in the bank, how much of inventory, none of that really mattered. So you can't do things, you can't do anything about stuff like a pandemic. So there will be a lot of things that will go wrong. That's why I said you want to make sure that you will definitely have failures on a daily basis. That is guaranteed. so the way it happens is, you will try to achieve certain tasks on a daily basis. Maybe, we'll just assume that there are 10 tasks Monday to Sunday. So you're looking at about 70, and each day you will win some, you will lose some. That's the nature of the game, right? That's why I said it's very, very lonely. You need people to kind of motivate you when things go wrong. Okay, let's go, let's focus on this, let's move on, and so on. And that's why I place the emphasis on team, trying to kind of motivate people and motivate yourself and motivate others. To me right now, these days, this is something that I've been learning in the last 2 years. It's extremely challenging, especially when there's so much happening. Their loved ones are getting sick, especially during the lockdowns. Even if somebody pass away, you can't even go and visit them, right? You don't have that closure. So it's not impacting them, but then they're in shock, right? But then work needs to happen in your company. So how do you balance that? There is no playbook for it.
I think, Shalinda, you came to a very good point. I think the next segment of questions that we want to ask from you is also about the team. I mean,
Right.
Whether a startup, okay, when you say a startup, some would think it's a one-man show where one person needs to do everything, one person needs to run your business, get funding. But how important it is to have a good team to support you. And you very correctly you told that there could be ups and downs daily. You win certain things, you will lose, but then I think if you have a support system around you, you'll be able to overcome these challenges pretty easily.
Correct.
Right. So my next question, what I wanted to ask you next is whether a startup is always a one-man show, how important it is to have a competent team to support your vision.
Right.
And also how and what are the challenges that a startup would face when attracting talent, because this is also a problem and also a challenge that we all know. It's very difficult to attract competent people to join your team, right? What are your thoughts?
Right. I think when you're at the beginning, if you have something, if you really, I would look at it from a stage standpoint. Like, let's say you have an idea, something came across, and you want to do your primary research around it. Maybe at that stage you're just one man, but at the same time it's not a company, it's still just an idea, right? But once you have certain, when you becoming inquisitive about that idea and its potential, then you want to have at least 2-3 people, right? So from a technology standpoint, what we say is, there needs to be 3 people. There needs to be what we call a product owner, or the person who will build the product, right? The tech product. And you need somebody who can sell. Majority of the time, the guy who can build can't sell, and vice versa, right? So at least at minimum, you need to be able to have 2 people, someone who can build great products, and one person who can, sell ice to Eskimos kind of a mentality, right? Because that's the most important thing. And as your company kind of, grows, then you need to get, other people around it to kind of support you. So it's never a one-man show. The ideal size of a team, a starting up, I would say, again, a lot of people have different answers to this. My ideal number would be 3 to 4 max. Anything more than that, it's crowded, right? You have spread too thin. Somebody there in that 5 is just dead weight. They're there because he or she is a friend, and start doing a startup is very exciting right now, and they just want to latch on to this excitement. They'll probably eventually drop out as well. So ideally, 3 to 4 people is what I'm looking at. And the primary thing that I will also look at is who's the product owner, who's actually responsible for building the product, which means that he or she is taking the leadership in terms of understanding what the problem is, and who is responsible for selling that, right? Because if you can't sell it, you're not going to generate revenue. If you don't have revenue, you don't have a company. It's a very simple equation in that sense. That's the part, what's the number, and the second part of it, attracting talent. I think it's a challenge for everyone, not just startup. It's essentially even large corporates have this problem right now. And the way that I look at it is, if you really ask me, what's the most single skill that the entrepreneur needs to have, that is the power of persuasion and convincing, because that's the one thing that you will be doing on a daily basis for the rest of your life, right? Whether it's convincing yourself, your parents, your spouse, your friends, relatives, that what you're doing is something meaningful. Same thing with employees, customers, investors. That's the number one thing, right? So convincing people, it's a skill that you can't really learn from a taking an exam or sitting for an exam. That's something that you learn on the job, by practicing, essentially. And the way that you attract talent, but I'm not really answering the question. I'm just explaining how difficult it is, right? So the way that you solve that problem is, you need to build a network and learn how to leverage that network, right? So if you need, let's say you're there's in this audience, there's somebody from a finance background, they're thinking of a tech product and they don't know technology. Immediately what you're going to ask is, you're going to look into your school friends or your university friends who did a technology degree, who you also trust, and approach them and have a conversation with them and say, look, I'm trying to do this. Are you interested? Because there is some relationship. And then if not, okay, can you recommend? Ideal scenario in a startup is, you don't get strangers teaming up. You always get people who know each other, either through childhood or through some form of mutual interest that is there. But that is both a blessing and it can go both ways, essentially. Sometimes they will come, but they're not passionate about solving the problem as much as you are, and then that will lead to certain challenges downstream. But you want to be able to have that maturity to kind of understand that very early on.
Yeah. Okay. So, right. I don't know whether this is a difficult question. Chalinda, what would you prioritize, hiring people or raising funds? And how do you hiring?
Yeah.
Right. So then, how would you convince your employees that you will raise funds and your startup will be successful?
See, if you can hire the right team, which means, like I said, if you can convince the right people to either give up their jobs and come and join your bandwagon, convincing investors becomes so much easier, because the investor will look at it. You look at your profile of people who are there. They'll see that, okay, all of these guys left their very steady jobs to come and join this, which means that there is something in this person, right? So that's how the investors will. That's one way the investors will look at it. How do you convince your initial co-founders to do it? I think that's the golden goose, right? So that'll tell you whether you are that's why I said ideas. That's why people say ideas are dime a dozen, right? It's all about execution, right? If your closest people, you come up with a bright idea, you pitch your idea, $1 billion idea, to your closest friends, and they think you're joking, that gives you an understanding of, okay, what the market is going to think about you and your capability, right? That's ultimately the truth in it. So if you can't attract people, if you can't attract talent, you're not going to attract investors.
Sweet. Do you have any questions around that?
Hope I wasn't too blunt on that, but that's ultimately.
No, I think that's the answer that we wanted from you also. Yes.
Right.
That's a very good one, actually. So I wanted to ask whether you should hire people first or raise money first. You already answered that. But what is your thoughts on getting key employees on board as vested partners or as equity holders? Because you already talked about getting known people to the initial team through friends or as people who share the same passion, and known people in order to work together, especially during the difficult times, and this is going to be a bit of a startup anyway. It's going to be a bit of a chaotic situation, and you have to be able to act as a team and drive the startup towards success. So
Right.
what is your thoughts about getting key employees on board as partners or as shareholders?
See, I think it also has to happen, right? If especially for your co-founders are not going to be interested if there is no skin in the game for them, right? So if there's no equity, most people will not be interested in. The way you should do it, however, is to make sure that you have what we call a vesting schedule, right? So for an example, if I were to start a company with, let's say, the three of us, Nishadi, myself, and Nedra, and we split our equity 33, 33, 34, we don't get that equity on day one itself. We need to kind of work in the company for 3 years for us to get that equity. So that's what a vesting schedule does, right? It breaks up. If I tell you that I'm going to give you 12% or 15% or 20%, whatever that percentage is, that is broken down into a few years. And at the end of when I deliver, my first year or second year, the equity gets released. So that's what you should have ideally, a vesting schedule. But it is very, very important to have. And on top of it, once you have it and once you're scaling your business, and if you have raised capital as well, especially investors like us, we will also enforce something called an ESOP, which is employee stock option, which also allows employees who are part of your organization to also have a little bit of equity or shares in the business for their contributions that they have done, because that is the right thing to do. And that also motivates people to kind of, give their 110%.
Chalindra, again, I would like to know your thoughts around this. So we all know that the finance person of a startup will have to have different skill sets and also a kind of a unconventional mindset, I would say, and to be ready to play multiple roles. What advice would you give to a finance professional who is going to join a startup, and especially if the person is joining from a very established organization?
Right. Good question. Tough question. Especially if you're going from a very established organization, like a corporate where there's a lot of governance, and structure.
A structure in place, I would say.
Yeah. When you have that structure, and when you go into a startup is by default designed to be chaotic, right? The reason why it's chaotic is everything that you do in a startup falls into two buckets. There is the now bucket where you have to do it now, and then there is the right now bucket where everything goes into that, right? So everything is now essentially by default, right? So it's designed, by default it's chaotic, and that's why startups also grow very fast. The more processes you have, you can't grow fast. You grow in a linear stem, because you have to abide by all the processes. Right now, yes, there is definitely, because the number of startups have also grown. We need, as you grow, you need a finance CFO or a finance controller. You need somebody who will do that, and there is a lot of demand for that. But you need to be very, very comfortable in being in that chaotic this thing, right? Some of the fundamental, and stick to the fundamentals essentially. So what you call the balance sheet, the cash flows, and all of these things, it doesn't matter whether it's a startup or a large corporate. The way you do all of these things is the same, right? So how do you manage that piece is the one part. The other part is, how do you improve certain, one of the biggest problem, if I take an example, is the calculation of your margins, right? Sometimes founders, especially if you're coming from a tech background, you might be thinking, oh, what, my GP margin is 40%, 50%. But once if a finance person comes in and they start doing their analysis, they'll realize your margins are maybe 25%, and it's not sufficient. So then they can actually help you restructure strategy. How do you optimize a lot of these things? So there's a lot of opportunity within the startup. So the difference, I would say, is, if you're a financial controller, so you will play everything from the accountant, bookkeeping, related work, to the financial planning, to financial modeling, to forecasting, all of that. And if you have that capability, then, you are a valuable asset to that company.
You already mentioned being comfortable in the chaos and playing multiple roles and sticking to the basics, like knowing the basics and implementing it in a startup environment where what's suitable, including the controls and getting things done and operational aspects, and also taking full control from throughout the finance function, I would say, and involving in operations. So that's a place where a finance professional can add value. So our audience is mainly finance professionals. Yeah. So I'd like to ask you, how can a startup get the maximum contribution and the best value addition by hiring a competent finance professional, or maybe hiring a consultant to say set the processes or set the basics in place?
Right, got it. I think again, like I said, if you look at startups, there's multiple tools, right? Like I said, my focus has always been on the technology and also fast scale companies, right? And product companies, where I see a large demand, of a significant demand, is on the financial planning and the projection side of things, right? So that is where we need a lot of support. That I would say the most critical function, because when you are trying to grow very fast, how do you manage your finances? How do you plan it? Which is also aligned, because there will be somebody, the founder, especially if they are from a technology standpoint, they will say, I need X number of engineers, I need, Y number of UI, UX, QA, all of these things. So they are good at that. But how does that relate into your capital requirement, and managing your working capital? These are the things that they will need the most amount of support as well. And then the other piece, I would say, is in understanding the unit economics. That's where the finance person will play. Okay, right now, some majority of the time, I've also seen this. You are doing very large volumes of revenue, but you also have a very leaky bucket. So it doesn't really matter, everything is getting lost. So you need that person to come in and put processes, make sure that there is reconciliation, there's cash collection. And this happened to a couple of my companies, especially when the pandemic happened. The nature of the business was that we would sell the product, and the customer would pay us within 3 months. So we always had, receivables, 4 or 5 million rupees worth of receivable at any given point, because they're paying us within 2 months. So your credit period was about, 90 days. Because you're a startup, you don't have that bargaining power as well. So the moment the pandemic happened, your suppliers stopped paying you, right? So now you're going under purely because there's 4 million on payment receivables, and that's why you can't survive, not because of anything, right? So we need to quickly kind of do that whole age analysis, understand what can we collect very fast. So these are situations that come up. But if we had a finance profession in that particular company early on, and we managed to figure things out, how do we bring this 90 days, or that person would have said, look, your credit period is 90 days, and that's too long. Because if I'm not mistaken, even on an age analysis, anything more than 90, you kind of remove as bad debt or whatever. So we would have been able to kind of plan a lot more better.
Thanks, Chalinda. So I think when we were planning this knowledge forum, we knew that our young finance professionals are keen on making a difference through their careers and following a different path. And we know you too have an interesting journey. Can you share your story with us? In very brief, I know it's quite interesting, and you have
Right.
had multiple roles, but I think it'll be, really interesting for the audience to listen to you.
Right. No,
I would
think,
add a little bit to Nishadi's question before you
sure.
start, Shalinda, about not having an unlinear career or a traditional career path, I would say, because we have a lot of young, newly qualified accountants also joining with us who will surely benefit and get inspired from your story. So yeah.
Right. No, I think, in a nutshell, if you look at the older thinking is that, you study, you get a qualification, you enter a certain vertical, whether it's banking, finance, or doctor, lawyer, engineer, whatever, and then you kind of go on that path. But I think what has happened, especially in the last, I would say, 20 years, from the .com boom itself, is that now you don't really have careers, your career path or your passion even can be very fluid, right? I mean, we live in a day and age where gender can be fluid. So if gender can be fluid, why should your career path should be fixed to something? And we've seen a lot of people who had very, very successful careers. I actually know a person, and I think we bought a painting from her as well. That's how I know her, who had a very successful finance career, used to do paintings as a side hustle, and now is a full-time painter. And this person has not gone through formal painting school or whatever. I don't know what artists go through, but nothing. It's just that at one point your side gig is now bringing you much joy and income than your career that you studied your entire life. So you might as well so that's what have happened, and that's what I've also done. I think I've just made sure that for me, I didn't know what I want to do. I still don't know what I don't want to do, but I do have a good handle on what I don't want to do. What I don't want to do, what I have a good handle on, where I don't want to be around with certain people. So I will say, okay, I don't like hanging out with people like this. I like hanging out with people like this. So you don't necessarily need to know everything, but you need to know something. So you need to know what is that boundary that is there. I haven't paid, I don't have a very good secondary education track record. I haven't done anything there. But then, later on, I'm one of those, what do you call, late boomers or blossoms or whatever that people say. But now it's interesting, right? So for me, what I've realized is from school times, I would have been part of Interact. I did a lot of sports, mainly cricket, and various other organizations. So I like working with people from different backgrounds, and that's exactly what I still do, right? If you really look at it, entrepreneurs, I work with people from different economic classes from around the country, around the region as well now, and they have stories, and I really like being part of those stories. So it's in high, looking back, connecting the dots, it's pretty much what I've done, just understanding and being a part of it, and how do you kind of contribute to that piece. So I think the main thing that I've, like I said, is you don't have to think in this linear way, right? There's so much things that you can do right now because of the internet and so on. Like I have founders that I work in Southeast Asia, and I have never met them. I've not even visited those countries, and I help them run those businesses in those respective markets, and it's purely you can do that purely because of the internet and so on. So I'm a big believer in technology, and right now it's the whole Web 3.0 side of things that is happening. But yeah, that would be in a nutshell if I had to sum it up.
Thanks, Charlie. So we would like to now ask certain questions around fundraising and pitching your ideas. I think we discussed about what is a startup, the startup ecosystem, and your team, how finance professionals should contribute to the development of startups. So by looking at the fundraising aspect of it, which is quite important, what are the secrets to successful fundraising? Because even with a product that sells, cost-effective marketing, and the ability to generate profit, many businesses can still struggle to raise funds.
Correct.
So, what is your view? What are the successful ways of raising funds? Or secrets to successful raising?
I think again, there is no one answer, and it's various things. End of the day, you need two people to shake hand, right? So as a founder, you're looking to sell your equity, and you need an investor who will be interested in buying that. And that is also very much there is a certain level of acceptance. Just because the business is booming, it's not like the stock market, right? The stock market, if you're buying equity in the stock market, you would open up your app or wherever, you look how the portfolio is performing, and you just buy based on that. In a startup, it doesn't work like that. The investors also need to like you as an entrepreneur. There has to be some common grounds, that for them to also get involved. The main thing in raising funding is, majority of the time, funding is a result of success, or it's not a reason for success, right? So if you have built a business and if it's generating revenue, like I said, it has gone through that incubation phase. Now you're looking at accelerating, and there are indicators that this business can become $1 billion business, then you will definitely have interested coming from the investors themselves. So it's a result of success and not a prerequisite for success, right? The other part of it is, when you're doing your first round, so fundraising, you do multiple rounds of fundraising. The initial one is, pre-seed, seed, we call it pre-series A, series A, and so on. The initial stages, which is pre-seed and seed, when investors are typically putting in money, they're putting in money not because of the business opportunity, they're putting in money because of the people. So if they like the people, it is what it is. And some people look at various things. I know certain investors, they will, look at, whether the founders, have they gone to Ivy League universities? Maybe for some of them that becomes a prerequisite. Some of them don't really care, right? I don't look at it. I have employees, I don't even look at which school they went to, whether they have a degree or not. I don't even know any of those things, right? I just have a casual conversation. If I like the person, I hire them, that's it. So you have different types of investors who will look at different things. For the success of it, it has to be a business that has a large potential. It has to be able to, either you're solving a very big problem and you build something innovative and you can do it at scale without really putting in a lot more people, because then you are increasing your operational expenses and so on. So that's something for investors, because for the investors, the other part is the mindset. The investor is, end of the day, they're investing in your company because they also want a return. So as a founder, you need to be able to tell, this is how I'm going to return your capital and your returns, essentially. And typically in a startup, they are not really investing in money, investing in a startup to get a dividend, unlike the stock market, right? That doesn't work. If they're putting in 1 million rupees, they want to understand, can I get 10 million, 15 million, 20 million back? And how long is that going to be? So what's that payback? What's that, exit multiple, as we call it? Because this is a finance group, I can use a bit of terminology, I hope. What is that exit multiple? And that's what we want to understand. So you want, as a founder, you need to be able to at least give an indicator, to those parameters. And then the other thing is, before you raise capital, it's important that you build a relationship, right? A lot of the times what I see as a problem in especially in Sri Lanka, is people don't spend time to build a relationship. They just go and ask for money. And if the person says no, okay, fine, screw you, I'm just going to go to someone else. So you can't be very transactional, right? Like that, right? It's not a very transactional game. You want to be able to say, and the other thing is, you can't not just expect money from person. they are going to get involved, and you need to be comfortable. You need to be able to say, I need your money because you have, this is your background, and I want to be able to learn from that and grow as an individual, and all of those things. That's why I said it's a very likable. And we've not invested in good companies, purely because we didn't think the founders and us, there was synergy between us. And like I said, when it comes to fundraising, it's again very much like a marriage, right? So you need to have your horoscopes align, stars or whatever,
and aligned properly.
Yeah.
Yes. Charlinda, so how I know you need to pitch your idea properly to attract the funds to your venture. And also, I think, people might be little skeptical whether, my idea will be stolen, right? How do you manage that risk?
Actually now, I think it's going to happen eventually, right? I don't think, first of all, I don't think there are any novel ideas out there, right? Even if you're coming and pitching an idea to us, you probably picked it up from somebody else, or you saw it somewhere else. So it's not original to you, right? That's one part. The second part of it is, like I said before, ideas are dime a dozen. So ideas don't really matter. It's all about execution. How can you execute? And if you can't execute, you're not going to execute even if you have money, right? So there are, it's like, some people, you can give them $1 million, they'll bust that $1 million in one night if they don't have that financial, discipline that is there, and they don't know what to do with that money. And there are guys, you give them, 1,000 rupees, they'll convert that 1,000 rupees into $1 million in, few years, because they're very good at managing capital and they understand. So it's a very much an execution standpoint. And the truth is, if somebody's gonna, steal their idea, and the reason why you fear is actually not because somebody's gonna steal your idea. The reason why you fear is because you are afraid somebody will execute your idea better than you. So that's a ego thing, right? So if somebody's going to do what you were planning to do much better than you, that only tells you that you are meant to do something else. So forget about that idea and just go, find something else. Because I also don't believe that we only have one idea, right? A lot of us, our ideas are fueled by our exposure and our experience. So you want to get more ideas, you want to understand, what success look like. All you need to do is expose yourself, expose yourself to go beyond your immediate circle, meet people, meet different communities, travel, do all of that. Then you will see a lot more problems, and then you will have, better ideas as well.
Okay. And as an investor, do you look at the pure growth potential or a solid business model if you are investing in a startup?
I would look at personally, I would look at the growth potential and not the business model, because the business model is also something that will get evolved as you grow. You're never going to have a business which will have the same business model. If you're having the same business model, you're not going to grow, right? Then you're like, like a roadside, tuck shop, that's it. You convert that roadside tuck shop, you say, okay, I'm going to go and list on one of these, delivery platform. If you don't have that mindset, that's a different business model altogether. It's not so your business model will always evolve and can evolve. But it's purely hindrant on the mindset. So actually what rephrase it, I wouldn't look at the business model or the growth potential. I'll actually look at the growth potential of the individual, because the growth potential of the individual is directly correlated to the business. If the entrepreneur thinks that they know it all and I have learned everything, then they're not going to grow, which means the business is not going to grow. As long as the entrepreneur or the person thinks I know nothing, you will keep on learning more, which means that you will, as a person, will grow, and as you grow, your business will grow as well.
One more question to, before we finish this segment, in the sense, the funding segment.
Sure.
If you are able to attract multiple investors, funding institutions, how would you decide, or how would you select the best combination? What factors that you should consider? Is it just, okay, I can go and ask everyone to join me, or whether there are prerequisites, or whether there are certain elements that I should be aware when I'm accepting the offers?
You also want to, that's a so the way that you would look at it is, don't look at it purely from a money standpoint. You want to also understand what's the value addition each person is bringing in. Obviously, for you to close the round, if you need all of them, then you need to learn how to get it to bed with all of them as well, right? But if you have the luxury of picking one person, then you need to look at it from a standpoint of the value addition. But at the same time, what I'll also say is that the person that has the most capital to invest and the highest value addition might not be the easiest person to work with, right? So that's a judgment call. So when it comes to fundraising or taking somebody else's money, I don't think there is, it's not going to be a happily ever after. You're going to have challenges with these people, right? And you will soon learn how to manage and navigate those challenges and perceptions, and not perceptions but expectations, right? That's the word that I was looking for. So that's something that you need to learn, and that's why I said you need to build a relationship before you take anybody's money, right? If you haven't built a relationship with them, if you haven't done your due diligence, so just like the investors are going to do due diligence on you, you should also do due diligence on your investors. So if they have invested in other startups, you should go and speak to those founders. How was it? If it's institutional funding, if somebody gives you a term sheet, you can definitely say, okay, I would like to speak to other founders that you've invested in. Please do an introduction. So you do your part as well. You ask around. And Sri Lanka is a very small country with, literally 1 degree separation, right? You'll definitely be able to find somebody who knows that investor. Do some due diligence on that individual.
Thanks, Shalida. Sui, I think you have a couple of questions on...
Yes. I think it's time to move on to the scaling part, the scaling strategy of startups. It's a part of startup going big.
Right.
So with focus on growth, many business owners sometimes forget to ensure that they have this attention to the product or service as at the beginning. So they had a very good focus on the beginning and bringing something novel and a good product or a service. And then when you scale up, sometimes this would not be the main focus, with the growth might be lost. So can you recommend some of the habits or best practices that businesses can have in order to be expansion ready, or if they're already expansion ready, in order to maintain it while they're scaling up?
Right. Okay. So, when you are a CEO of a startup, the E stands for everything, right? You're like the chief everything officer. But as your company grow, the primary responsibility one of the primary responsibilities is for you to build that management team, right? So building a management team is slightly more complicated, difficult than building a team to build the product, because there you're hiring people to build something, but the management team is separate, right? It's people that you trust who will go on. So I think the biggest challenge that a founder will have is, you've grown up having all responsibility for yourself. Now you need to kind of give responsibility to different people and empower them and trust them that they will do the right thing by the company, right? So you always have to put the company first, then yourself. That's the most important thing as a founder. So when you're scaling up, that's the most important thing. So we see a lot of companies, they bootstrap very, very successfully. They've grown. They're sometimes even doing, a couple of $1 million a year. But then it's still the same founders. So if somebody is coming in trying to invest, that becomes a red flag, because you need that proper governance structure. So you need your finance professionals, you need your HR, because there has to be a HR process now. Like I said, when I'm hiring, I just have a conversation. If I like the person, I'll ask my questions, I'll do my drilling, but I will not look at qualification, school, none of these things, right? But if the company is big, then I can't take that call anymore. There has to be some method to madness. So similarly, how do you do contracting? All of those things have to come into place. And I think at that stage, when you're at a scale up stage, even if an investor is coming in, the investor will typically hire one of the big fours to do some due diligence on you, right? So your financial due diligence, your risk due diligence, all of these things, whether it's a PwC or a KPMG, EY, all of these guys come and will do that particular piece. So you want to make sure that all of those things are also there, right? So you need to have that team, and that's something that founders will not know. So you need to bring in those people into the picture, and you have to set it right before you kind of go and try to raise capital. Because when you're going and raising capital, that's something that you will also have to be put in forward, say, yes, we are the 3 co-founders, we are responsible for these aspects of the business, but the governance, the best practices and everything is done by our management team, and these are the people, and they are the ones. So that's why sometimes you have startups or you have scale-ups where the founders don't have any qualification. They're naturally born talented people, and that's fine when you're raising angel funding. That's perfectly fine. But when you're doing a series A or pre-series A, large rounds, you need to bring in people who has qualifications. They're the ones who will understand, okay, this is how it works, right? So that's why I don't want to a lot of people say they would look at, let's say, Bill Gates and Mark Zuckerberg and say, oh, what, they're Harvard dropouts. Yeah, that's fine. But then the reason why the capital came afterwards is because they were able to hire the people who didn't drop out from universities, and they came in and they helped build the company, right? So it's a very good, when you're pitching and when you're talking, it's great, but then the reality is slightly different, right? There's a whole, there's literally 1,000 people who are qualified who are building. I think there's more than 100,000 employees who are part of Facebook. If that was the case, then they should have just hired people who dropped out, right? They haven't gone and done that. When they're hiring now, they're looking for Ivy Leagues. They're looking for people with qualifications. So you need qualifications and all of those things coming in if you are going to build it. But it might not be necessary when you're starting off. You might be successful starting off because because you were lucky, it was a fluke, right? As they say in Sri Lanka, Kana shot, right? Fine, it worked, but it might not be the proper way to do everything.
It's a good input for us also, not to have misconceptions and have a very rosy picture towards starting up, but to be very practical and realistic about this. I would like to ask about the trends, like the post-pandemic trends especially reveal a tendency towards great resignations and more towards risk-taking. So I would like to ask about global trends as well as local trends in startups, and the support system in Sri Lanka for startups as well.
Okay. I think the first part is quite interesting, right? So this is something that I'm also quite, reading and learning. And so for me, the most important message that I will tell everyone is learn how to have, learn to have independent thinking, right? A lot of the time we have just like, herd immunity, we have group thinking, right? Because we want to be part of a group. We like to be accepted by people. So we act, behave, say things that the people that we aspire to be close to would say and do and whatnot, right? But if you are really passionate about entrepreneurship, learn independent thinking, because there are going to be times where you will do certain things because you believe in it, and a lot of people will say that you're crazy, but you should be very comfortable with it, right? So if you look at the question, there was a sidetrack, but the reason why I'm saying this is, if you look at the what's really happening, the barriers to entrepreneurship globally and even in Sri Lanka has reduced, right? So if I look back, 15 years ago when I was studying, I needed to learn how to code to build a website, and that's what we did. Right today, you don't need to know how to code. There are stuff like no code, low code platforms where you can just drag and drop and put an e-commerce site or build a website in one day. There's a platform called Wix. You have stuff like, WordPress, so on and so forth. So what the barriers have kind of come down, which is allowing a lot of people to really monetize their creativity. 15 years ago, it would have been very, very hard for me to make ends meet playing in a band, but now you can, right? You have stuff like YouTube. You can record yourself. You have devices. You don't even have to go into a studio to record your music. You can do that with the latest iPhone itself, and the cost of that will be probably $500,000 right now, but that's aside. But you can do that, and then you can put it on various platforms, and you can launch your career. So the barriers to entrepreneurship and the ability to kind of really leverage your skills have opened up, and this is partly what is fueling the Great Resignation part. The second part why it's happening is also a lot of the times, most markets, especially in Asia, Sri Lanka has grown by leveraging labor, irrespective of what industry we look at, whether it's tourism, whether it's apparel, even technology, IT industry, we leverage labor to grow. And now people are realizing, because of these things are there, I don't need to. I can leverage my creativity, and I can make I can make a living. I can follow my passion, and so on and so forth. So I think this is happening, and I think it's a fantastic. That's why it's a very, very interesting time to be in. I also don't. The reason why I said individual thinking is, up until when you're growing up, you learn about blue collar, white collar, right? And you believe in that. I don't believe in that now, and the reason is, it doesn't really, the blue collar, white collar argument falls apart if you are treated as an employee, as someone, you are hired, you're paid a salary, and your job is to build somebody else's dream. It doesn't matter even if it's a white collar job, you're going to feel like a blue collar worker. It's all about how do you treat people, right? And the same way, there are people who are doing labor, but they love, because the employer treats them like family, right? They're taken care of very well, and families, and build houses and all of that, and we've seen these stories, right? So similarly, it doesn't matter, right? It's not based on your job, it's based on how you are treated as a person. And I think that's what's really the pandemic kind of accelerated. I think this was happening all over the world. It was at different stages. It just accelerated everything.
And Shalinda, how do you, or rather, what is the support system that we have within Sri Lanka for startups? I think that's something that all of us would like to hear from you.
I think there's quite a lot right now. Like I said, because entrepreneurship is also growing, there is demand now, and then there are a lot of organizations that are also coming in, right? Like I said, if you are looking at technology, ICT, there's a whole bunch of work. And obviously a lot of the support structure is still centered around Colombo, but I do see it expanding outside, and now it's at a stage where even us, we are training facilitators in those markets, because I would always I've always travel. I've been to most of the universities, state universities, doing workshops, but it's not a scalable way of doing it, right? Because my time is limited. So now what we're doing is we are working with different people in those markets, and we are training them so that they can do that piece in their market. So there is a lot of support structure. That's one part locally. The other thing is, whatever that you need to learn about entrepreneurship, you just need to YouTube it now, or Google it, right? The resource, there's so much of resources out there. And the first part of it is obviously the mindset, side of things. And, there's podcasts. I would encourage people to listen to a lot of podcasts, because that will help you to think outside, right? We always say this, Sri Lanka has this island mentality, or a frog in the well mentality. We've all lived like frogs for 2 years now. Most of us didn't travel, right? So, but we still got connected. And that's why because you have the power of the internet, you can actually go into, these connect with people. I randomly connect with so many people. I would just reach out, because even if the worst thing that they could say is, they could not reply to you, and that's fine. It doesn't really bother me. And if there is somebody, I would always ask questions. So I think, you need to put yourself out there and kind of, expand your horizon. And there's so much of resources out there, both locally and internationally. We partnered with the Startup X Foundry. We did 19 episodes, which is on YouTube. Happy to share the link. It's done in local language with subtitles in English and Tamil as well, around entrepreneurship, right? So because of all the questions that we were getting, we just sat down, collected all the FAQs, and used those FAQs to build content, which is about 1.5 hours, similar to what we are doing right now. And then we broke it into different episodes and put it across. So accessibility is not an excuse anymore. Whether it's Sinhala, Tamil, or English, the content is out there. You just the thing that we don't see is that that desire and the hunger, and because everybody expects everything to be nicely packaged and delivered FOC to your home, and then they will consume it. I don't think that's going to happen. You need to take initiative and just go out.
I think if you can share the link with us, Shalinda, that will be
sure.
very useful. I think we can share that among our membership also. Anyone who is interested, I'm sure that's going to add a lot of value to them. So I think before we wrap up this session for today, Shalinda, I would like to get some final remarks from you. What advice that you can give to a person who is going to start on his own, start his venture on as an entrepreneur? What message that you can give to our audience?
Right. I think couple of ones. First, don't take advice from people, especially if they don't have to pay a penalty for giving you the wrong advice. Right, that's number one. Also, don't take advice from because this is related to startups, right? You need to have. So why I say this is, there's so much of people talking about entrepreneurship, because that's why I said it's easy to learn about entrepreneurship, because the content is out there, right? So the main advice is just go out there and do something, right? And yes, it's scary. If it's scary, first start off by being part of startup. If you're financial professionals, as I said, I think Nedra also asked this question, there is a lot of demand for finance, everything from bookkeeping to understanding. Like I do sessions on, we partnered with several organizations, we try to do financial literacy, and the reason is a lot of the entrepreneurs, and this is no fault of any of you, finance is the least interesting subject that they pay attention to, right? They consider it something as boring. They're like, okay, I don't understand P&L. So we've run so much of workshops, and then we realize, okay, it doesn't matter how much of workshops that we run, even simple things like understanding cash flow, balance sheet, it's going to be at the bottom of their priority, right? So then, we are trying to set up this kind of like a call center. So if you have a problem, just call a, toll-free number, kind of a scenario, tell your problem, and we'll have somebody there to help you out with that. So we're trying to, do something like that. So get involved in a startup. And I'm sure if you ask around, a cousin, one of your friends is already doing a startup. So get involved, learn that whole experience. The most important thing in building a company is building relationships. You need to be able to build relationships. So learn skills. That's the most vital skill, I would say, that you need to kind of learn. How do you build relationships with different people? And the reason why you do this is, and it's a concept that you all understand, which is compound interest, right? So everything in life, where it's not just money, even your relationship is all about compound, so just keep on compounding your skills, your network, get involved, put yourself out there, try to understand, and then at one point, you will realize, okay, you know what, this is what I want to do. It'll come. It's like driving, when you start cycling or even driving, sometimes, they tell you to, remove your slippers or shoes and first get used to the pedals, but later on at one day you realize, you know what, I'm ready to just, go.
Thanks, Chalinda. I think we had a wonderful session, a very interesting session with you today. I would like to thank you again for joining and accepting our invitation and joining with us with your busy schedules.
Pleasure. Thank you so much for the invitation.
You're most welcome, Chalinda. And thank you to all our wonderful participants who was with us all throughout. And I would like to request all of you, go and subscribe to our YouTube channel, the Young Chartered Accountants YouTube channel. You can listen to all our previous knowledge forums. I'm sure you will find it handy one day. And with that, I would like to thank all the support system around us also, the Institute, and also Nayanthara for joining with me to conduct this session today. Thank you and have a nice weekend. Thank you, Chalinda, once again.
Thank you for inviting me, Nishadi, Adi, and Natra as well, and CS Sri Lanka. I know we've been trying to plan this for a while, but super glad that I got to do this finally. Thank you all for joining in as well. Take care, everyone. Stay safe. Bye-bye.